There's a reason why hard stuff gets higher returns because most of the world is doing the easy way. 401k, S&P 500. Yeah, we know the S&P 500 is going to go up 6 to 8%. We know that. We're not dumb. We know the American economy is going to be fine long term. So like even like the '08 market crash, right? People lost a bunch of money. Well, you lost because you sold because you were too invested in it. So even like, look, I'm not going to say people will never lose money. It's, oh, are you managing your risk? Like when someone says, oh, I over leveraged in one trade and lost it all. Well, that's your fault. Why did you put so much in one trade? I would never tie up all my cash into one asset, let alone one trade. It doesn't make any sense. So people are looking for home runs. What they need to be looking for if they're on their come up is consistent wins.
All right, guys, today I got someone who's doing big things in the options trading business, and he's going to share the A to Z with us today. I got my man, Kamron Dasani. What's up, Cam?
Rich, thank you for having me, man. Appreciate it.
Dude, appreciate you coming on, man. Long time coming, dude. We've become pretty close over the last few months, dude, and just grateful for you coming out here to San Diego. And bro, your girlfriend's a cheerleader for the Dallas Mavericks NBA team.
Absolutely.
I love it, my man. So, anyways, dude, a lot of game to cover here, a lot of game to spit for the audience. I don't know much about day trading. I got to be honest with you, options trading. So I'm going to be learning alongside of the audience here. But first question here is, what is options trading?
It's a more strategic way of investing in the stock market. Okay, so when you buy stocks, for example, you can buy companies like Tesla and Nvidia. Why do people buy Tesla and Nvidia? Well, because they think it's going to go up, because they believe in Elon Musk, they believe in Nvidia having good technology, so on and so forth. With options, you're making more strategic predictions around those stocks. So instead of just saying, oh, I'm going to buy shares because I know it's going to go up eventually, it's, hey, I know, or I'm predicting that Nvidia is going to go to $500 a share by June of this year at the latest. You have the option to sell anytime before that if your prediction is coming true. So it's just, you're making more strategic bets in the stock market, and as a result, you get rewarded for that.
Okay. And so give us an example of how that would work.
So earlier this year, or well, it's 2026. So earlier in 2025, we had an opportunity to invest in Nvidia because we did our technical analysis, thought this prediction would come true. So basically, Nvidia, $300 call. A call means we're predicting it's going to go up, which means at that time, Nvidia was below $300 a share. Okay. So Nvidia, $300 call by latest May 15th of last year, 2025. We made this prediction in April. So it took a month for this prediction to come true. And as a result, we actually did a 390% return, which
in how
is
long?
in 1 month.
Damn.
So imagine if we just bought $10,000 of Nvidia stock at that time in April, we would have only made like $1,200 in profit if we just bought the stock. But because we made the strategic, educated prediction, we made 30 grand off of our 10 grand.
So this is a safer way of investing in the stock market. It sounds like you're mitigating your downside risk, and then you're multiplying you're juicing your upside. Is that right?
Correct. I wouldn't even say it's a safer way. It is very unsafe if you don't know what you're doing, which means you can put 10 grand into it and you can watch it go down and down and down. And if you don't know how to get out at the right time, then you're just going to lose your whole bag. What we do is we actually tell you exactly when to buy and sell. So even if we are losing, typically our analysis is still right. So we won't actually say, hey, get out, we're down 10%. No. We're going to buy more. The same way right now in crypto, people are buying a lot of Bitcoin that are smart because they know things are going to go up long term. So as long as you trust the predictions you're going to make, or trust the people calling the predictions, why do I trust my team? Well, they're ex-Wall Street guys. So they actually traded on Wall Street. Those are the people that I hired to teach me how to trade. And now we built a company allowing people to copy those trades.
Okay. And then what's the difference between swing trading and day trading?
Day trading is a full-time trading strategy, which means you need to be a full-time trader if you want to day trade and be successful. That is why 99% of people fail, because they're trying to balance a full-time job and day trade, and they lose and they lose and they lose.
And that's like jumping in and out of the market. Like,
yeah, quick.
Could be 10 minutes, 15 minutes, 30 minutes here.
Exactly.
You're in and out, and you're just looking for what? Little 2%, 3% gains?
No, 10, 20 even.
10 to 20%.
Yeah,
gains.
it can be more.
Okay. Now stocks that go up 10, 20% in 20 minutes, those are very volatile stocks, right?
Yes.
Very, very emotional based. People were in and out.
Based on news, could just be like, yeah, like news influencing a stock to go up and or down, and then a lot of like people that aren't smart sell off, so then the stock crashes. It could be something like that.
Okay.
Swing trading, though, is a part-time trading strategy. So this is what I learned from these Wall Street guys when I was working in tech, and I was like, I want to get into the market, but I feel like I'm just investing in the 401k and the S&P 500, and it's not really changing my life. Like, it's just kind of growing, 5% a year, 6% a year, 8% a year, whatever. It's not enough. Swing trading is part-time because you don't buy and sell on the same day. So think about that NVIDIA trade that I just told you about. $300 call, expiration 5/15/2025, May 15th, 2025. We got into that of April of last year. We didn't have to do anything for a month. We just sat and waited. So you don't need to watch the charts every day with swing trading. You don't need to worry about it fluctuating in the short term. You just need to wait until that expiration date or close to it for your prediction to come true. So it's a lot easier to do if you have a busy job like I did working in tech, where I'm in and out of meetings. I can't be on this chart all day making sure oh my God, did I lose? Did I win? No, I'm just going to wait it out.
Yeah. How long does it take typically to enter a trade, swing trade?
Logistically, it literally takes 45 seconds. There's only 4 buttons to click on your phone. The stock, the prediction, so NVIDIA, $300 call, expiration date, May 15th, 2025, and then how many contracts you want to buy. So to not confuse the audience, contracts just means how heavy do you want to invest? Do you want to invest a little bit? Do you want to invest a lot? Right? And you can pick how heavy you want to invest. Once you pick those 4 things, the trade's in. To sell, only 1 button. How many contracts do you want to sell? Do you want to sell off some of your profits and then keep some in the game and keep playing a little bit? Or do you want to sell it all and take your win? So we help people understand the strategies behind when we're buying and selling. So when they are buying and selling and following our trades, they're like, oh, we actually know what we're doing, but we don't have the stress of having to actually make the decisions on our own.
What kind of money is possible doing this for someone maybe listening to this show and they're like, hey, I got a full-time job, but I'm looking for a side hustle in 2026. What's possible in terms of, someone brand new jumping into this and how much money they can make in a month?
Yeah. So I want to start with the account size that actually makes sense.
Okay.
If you have 5 to 10K, that's enough to build a really good portfolio. Okay. I have a client, he's a software engineer at Capital One, very busy in office. We turned his 5K into 40K within 4 or 5 months. Part-time, still working his really busy job. Okay. I also have clients, shout out to Zach. Zach joined my program. I met him at the gym in Dallas, joined my program in October, literally October 20th, if I'm not mistaken. He had 25K to trade with. So he had capital from his business, so on and so forth. He's up to 110K since October 20th because he has a bigger budget to invest in these trades and he can continue to let the money compound. So I've seen Zach make 80 grand in a month. I've seen
80K
in a month.
Damn. Off of how much money?
Off of that 25K.
Damn.
Yeah. So you can get into a lot of trades fast with more money, and those people are going to make more money. But I would say on average, if you have 5 to 10K, maybe 10K, you can really make a consistent 5, 7, 8K a month.
And how much time would this require of someone that was brand new to jump into this and actually do it successfully?
I mean, man, if you just spend logistically, like I said, it really only takes 45 seconds, but to get in, understand what you're doing, just spend 30 minutes a day understanding what we are doing and just copy, right? Because what I realized is most people don't have the time to master the skill of trading. So rather than master the skill of trading, why not just jump into a system led by people that traded on Wall Street that really know what they're doing, the experts in the field? I even when people ask me, Cam, are you a master of trading? It's I'm not even a master of trading. I've just hired people that are masters of trading that traded on Wall Street. They are glued to the screen. They are glued to my account, right? So now we offer this to the, average person where a hedge fund isn't going to take their money. They don't have enough for it to matter. But I will, and I'll make you 3 to 5x on it.
That's
right?
really good.
So it's just a better value exchange.
Yep. And by the way, if you're listening to this and you resonate with the trade stuff, with what Cam's saying, Cam's going to be giving out a free 14-day trial to trade with him. Where can they find that?
Yeah. So guys, you can trade with me for 14 days completely free. The reason I offer this is because you'll make money in 2 weeks and you'll realize that this is true. So I don't need to necessarily charge you in the beginning. But yeah, Link will be in the podcast description. It'll be a Discord link. If you don't know what Discord is, it's basically just like school, but it's like more optimized for trading. We also have a live stream in that Discord. Think of like you log in on Zoom and you can literally watch us trade live and copy the trades live. So there's literally no way you don't win unless like my traders hit their head on the wall in a car accident and become stupid.
That's really good. And by the way, suggest all the followers to go, listeners go shoot Cam a follow on Instagram, at Profit with Cam. But Cam, right now with the crypto markets, Bitcoin's down right now. Is at 120K, and over the last 5 months is down to 65K right now. The Bitcoin guys have been a little quiet lately. I gotta be honest, man. I've been having a lot of these guys on the show, but they've been a little quiet lately. How is this? For someone that's like, hey, like, should I get into the crypto thing? Should I get into the Bitcoin thing? Should I get into this? How do you approach that?
Okay, so there's a difference between investing in Bitcoin and investing in crypto. And here's what I mean. Bitcoin has a predictable investment cycle, meaning every time there's a crash, there's another peak that's bigger. And then the next time there's a crash, it's smaller. And then the peak next time is bigger. That's a good asset to invest in. Right now, I just bought a lot of Bitcoin because it's a great time. Because I know, and you asked me even before the show, like, hey, Cam, is it going to go below what it's already been? It might, but that's okay. I'll buy more when it goes down as well. Eventually, the peak will return. The difference between Bitcoin and investing in crypto is that most people are trying to like find cryptocurrencies that can really blow up, which is the equivalent of trying to find the next Uber or DoorDash tech company and get into it really, really early, which first of all, you have to be an accredited investor to do that. And you need connections. That's not how you want to invest with crypto because most of these projects don't mean anything to the real world. They don't have a real use case. Even Bitcoin technically doesn't have a real use case. We can't go to Safeway and get groceries with Bitcoin today. Yes, it has some value, but it's really more about the ecosystem of crypto and understanding that people are betting on things that don't even matter yet. So if you want to be an angel investor in tech, but you're not an accredited investor, sure, take your 50 to 100 Cray, spread it across a bunch of crypto coins, and maybe one will blow up. I've had that happen to me before. I've made $500,000 off one coin, right? My brother built it on the Solana exchange in 2020. So I've seen that happen. But for somebody that has 5 to 10K, 10, 20K, 20, 30K, don't try to like gamble on crypto and be an angel investor and hope you're going to be right.
Yeah, that's really good. That's really good. Can you do the swing trading stuff with Bitcoin?
Technically, you can swing trade Bitcoin.
Really?
Yeah, well, because swing trading just means you're basically buying on one day and selling on a different day. You can do that with crypto, but
what about options?
Can you trade options with crypto? No.
Okay.
No,
okay.
You can trade futures. You can trade futures, which is a whole nother thing that I don't do, and my traders probably understand it better than I do, but that's not my thing.
Okay. So, as far as getting in the game, what other things do people need to know? And actually, I'm curious, like, what are the biggest mistakes? What are the biggest mistakes that you see new day traders, option traders get into?
Well, what you just said, right? Why are you trying to be a full-time trader when you have a full-time job? Why are you trying to be the guy with 3 monitors and become the meme trading guru? All these guys that are super good at theory, I know guys that have 6 monitors, they still have full-time jobs because they're trying to be a full-time trader with a full-time job. It doesn't work. You need to first find a part-time trading strategy. The one that I've found that helped me when I was in tech in 2017, 2018 was swing trading options. You're making strategic predictions in the stock market and you don't have to sit behind a chart all day. You don't need to have 3 monitors. You can just follow a good team. I got lucky by following the right team. Finding the right team and then following them. How did I do that? Well, I worked at a fintech company, financial tech, called Veeam, basically international payments company, similar to PayPal, but more B2B. Goldman Sachs was an investor in that company. They invested 25 mil. So I met a lot of Goldman guys as a result. Then I met the right traders, evaluated them, saw who was really good, followed them, took the risk myself, realized who was good, then asked them, hey, do you guys want to work at Goldman long term, or is this just like what you're doing? They're like, I mean, it's whatever. We make good salary. We wear a suit every day and walk into Wall Street. Fine. Okay. What do you really want to do? We really want to trade full time for ourselves. I said, why can't you? Well, if we work at Goldman, we can't trade. We're not allowed. It's insider trading. We have the inside edge. I said, okay, so if you leave, then you can. They're like, yeah. I'm like, okay. Would that make you more profitable? They said, yeah. I said, okay, cool. I convinced them to leave Goldman, combine our skill sets. They're the best traders in the world, sum up. I'm an incredible content creator, master marketer, sales guy. I can convince people to join my program based on the results that these traders have, and everybody's happy. So whatever you pay us, you will make way more than you pay us because you're following people that literally traded on Wall Street. It's just a value exchange. So when people even ask me, Cam, why teach trading? Why not just trade full time? Well, I'll tell you why. It takes me 2 weeks to make 20 grand on a swing, for example. I can also make 20 grand in a day telling 2 people to make 20 grand in 2 weeks. It's worth it for them because they're paying me way less than 20 grand, right? So people don't understand business is about value exchange. It's not, we can say, I want to help people, or it brings me, yeah, that brings me happiness too. I love helping people. But on a business value exchange, that's the reality.
Yeah. What do you say to the people that are like, hey, why not just start a hedge fund if you're this good?
Here's why. Once you go through Series 65, which is basically the licensing that you need to be a licensed money manager, the SEC will start watching everything you do. Not really interested in that. Second thing is you can only charge so much of a performance fee as a hedge fund. Most hedge funds are 2 and 20, meaning 2% assets under management, 20% on the performance, meaning if I do well, you do well. Well, 20% on performance, if I'm managing somebody's 5 to 10 grand, isn't anything for me. I'm poor. So why not just charge a consulting fee? I would need 10 to 20 million under management for it to even be worth it for the performance fee to make more than what I make now consulting. It's just a better model. The reason why people get confused is because they didn't, like back in the day, only hedge funds existed. There was no online consulting. There was no ex-Wall Street guys online building a more lucrative business due to the power of podcasting, meta ads, YouTube ads, everything that you and I do to bring clients in. And also, for what it's worth, I actually like helping people that have less money make more money because it's a bigger impact. For example, you give me $500,000 and I manage it. Yeah, you'll be richer, but you're already rich.
Yeah.
No pun intended.
Yeah, no, I feel you on that, man. The retirement fund thing is interesting. I used to have a 401k. We know there's a bunch of IRAs. We have folks that have self-directed IRAs that invest with us on the Summers Capital side. But does this option trading exist within retirement funds at all?
It's not something that people will tell you to do, okay? A 401k, even when I worked in tech, they were like, hey, just we'll match this amount that you put in or whatever. And some companies don't even match. But the reality is they're only giving you 4% year after year, 5%, which is like very, very little. And then you can't touch it until you're 60, 65. You got 10 years left to live, most people. You run out of that money. Even if you keep putting money in, eventually, yeah, maybe it'll become a few $100 grand and then that's your nest egg. But you have to live very, very calmly on that money at a very old age.
They call the safe withdrawal rate 4%.
And why do you think they can give you 4%? Because they're doing riskier things to make more money, like trade options. They're just not giving you the profits.
Yeah, and if you think about it, I mean, in my mind, the retirement system's a little bit broken. You know, they tell you safe withdrawal rate's 4%. And if you look at the average retirement account balance for a lot of Americans that are in their 40s, 50s, and 60s, you know, 4% of that number is not much. And even if you crushed it in your career, you had $1 million in your 401k to retirement, that means you're going to live off of $40,000, but you got to pay taxes on that $40,000. And by the way, this is in 20, 30 years where, you know, 40K is probably only going to be worth 20K, right? And so I just think it's a system that doesn't work that great. Would you suggest if someone's listening to this right now, they have some money sitting in a 401k, would you say, hey, borrow against that or pull some of it out and then get into the options trading?
I don't even have a 401k. Let me ask you a question. Why do you think people aren't skeptical of the 401k?
Because society teaches us from a young age to go to school, get good grades, go to college, get a job, diversify, don't take any risks, invest in your 401k, play it safe. And they teach you that the 401k, the IRA, diversification, they don't teach you business. They don't teach you real estate investing. The system in society conditions us to think that the 401k is safe. That's why.
Exactly. So listen to that again and play that back in your head. You cannot invest in things. First of all, let me take a step back. Go find a rich person that said, I really got wealthy or rich off of investing in my 401k. Once you find that person, which you won't because it doesn't happen, that's not why people become rich. People become rich by taking risks. So if you don't want to take risks, then just expect to be middle class. And that's fine if that's your goal. But don't act like you want more and then try to make the same decisions as the rest of the world, because the rest of the world doesn't have more. Okay. So yes, to answer your question, I would get rid of your 401k entirely. Even if there's a penalty. I've literally withdrawn my 401k to invest in options trades when I was in tech, because I was like, this is not going anywhere. My parents were freaking out. Oh, you're going to pay a penalty. Okay, I'll make the penalty back with the options trading returns, right? So yeah, no point in having a 401k today.
Yeah, so for me, man, I cashed mine out in 2019, and I had an 11-year government career. I had about $310,000 ish in there, and at the time, everyone told me it's too risky not to do it, and I did it. People ask me today, they're like, "Hey, like, do you think I should cash it out?" And I think for me, it depends on where you're coming from. I think if you have a opportunity to roll that into a business, into real estate, or maybe they want to roll it into options trading, and they have a clear path and the right guidance and the right mentorship and structure to do it successfully, and they're like, "Hey, I'm all in," then I say that's the best path for you. But on the flip side, if you you have intentions to stay at your day job, you want to finish out your career, you got kids, you got a family, and you're not all in on whatever this next thing is, then I think the best move for those people is to keep that money in there and maybe just borrow against it. You can borrow typically 50K against your 401k or IRA. The interest is low, and the interest goes back into paying yourself back, and maybe you just dabble with that. That's the right advice, I think, for people that are like not all in on the next thing, because the next thing is not for everybody, in my estimation. But you got to really want it. Like, you got to really want it. And I think in order to be excellent at a lot of stuff, especially in business, like you gotta be willing to overpay. It's not just money, but it's time, it's resources, it's energy. And I think for a lot of people, that's not the case. Now, with what you have, shoot, you could borrow 50K against it, start a trading account, get into the right rooms like what you have. And then you could turn that 50K into, 250, and that now you got some money to play with, right? And so I think it all depends on who the person is, for me.
Yeah. No, I mean, look, it all depends on what your goals are. We see people that have 800 credit scores for their entire lives and do nothing with it because they think debt is risky. Well, what's the point of having an 800 credit score? Just to tell your other middle-class friends that you have an 800 credit score and we can all show off? It's like, there's no real reason if you're not going to do anything with it. People brag about having good credit. It's like, what do you have cash? What's your lifestyle like, right? People say cash is trash or whatever they say. I mean, I used 92K in credit 5 years ago to become a multimillionaire at 30. Like, I took risk. I leveraged debt. I borrowed from the bank at 0% interest because I had a good credit score. People have no idea what's out there, what's risky and what's not. What is risky about having a 0% interest credit card where only the minimum payment is due for 2 years? Minimum payment is 1% of utilization. That's nothing. If I use 10 grand, what's 1%?
Yeah,
Yeah, it's a very low number.
Yes, it's very small, and there's arbitrage, right? And that's the biggest thing with leverage is like, if you go buy a piece of real estate, on average you're gonna put maybe 20% down, 25% down, let's call it. You're now getting a 4x multiple on that investment, right? So that's big as well. How'd you get into options trading, man? How'd you learn all this stuff?
How did I, or how did somebody?
How did you learn all this stuff?
Well, yeah. So working at Veeam, okay, fintech company in Silicon Valley, San Francisco. That was my first tech job out of college. And Goldman Sachs was an investor. They invested 25 mil. Google was also an investor, Google Ventures. So I just met a lot of people in that network, Goldman Sachs bankers, traders, hedge fund guys. And that's when I started networking aggressively in that field, because even my sales manager on the tech side was trading options at work. And I was like, how are you doing this? I'm like, are you day trading? He's like, no, I'm swing trading. I'm like, what's that? He's like, well, I'm just entering a trade on one day and selling on a different day. I'm like, how do you know what to do? I'm like, well, I follow the right people. It's not like he's studying that much himself. He has a full-time job. He's managing me, right? And other people. I'm a lot to manage.
Yeah.
So just networking and connections, man. Like, think about you, right? You have a fund. How do people find out about it? From this podcast, from your yacht workshops, from other things. Well, you can also invest in a garbage real estate fund or a garbage real estate investor by following the wrong person. It's all about who you know, right? Why do you think really rich people invest in hedge funds? Well, because they don't want to be master traders. They want to invest in master traders because they know the returns that are possible, right? So I've traded the same thing for the middle class.
That's really good, man. That's really good. So, what's like for someone who wants to get into this, let's say they're listening to the show right now and they're like, damn, this is really cool. How much they need to get started to like open an account to actually, not just start and like dabble, but to actually like make some movement?
Yeah. I like the account size 5 to 10K because I've seen with clients in the past, recently in the last 12 months, what we can do with it. Like I said, the software engineer that I mentioned turned 5K into 40K in a matter of like 4 or 5 months. So if you have less, like a couple grand, it's still worth it to try, but just don't expect like really big returns quickly because you just don't have enough money to enter a lot of trades quickly. Now, the more, obviously, the better. I have people with 10 to 20K, or Zach, for example, with 25K. His portfolio is over 6 figures now. And he started in October, which was not that long ago. It's February now. So if you're below that, like, oh, I have like $1,000 or something, we need to talk about debt and leverage and credit. Okay. So I have a credit partner that basically what they do is they will match your available credit. Okay. So let's say you have 10K on a Chase card available. You haven't used it. Cool. You can keep that available limit. What my financier will do is they'll say, we'll give you another 10K, 0% interest, 12 months. Doesn't matter what your credit score is. They're a very specific lender. Okay. And now you can pay, you can get that, turn it into cash, and then actually trade with that. So it just, there's a lot of hacks in the world that people just don't know about. If you think that's risky.
Do they cap out? Like, what if you have 200K available? Will they float you 200K at 0%?
Yeah.
Really?
Yeah.
Damn.
As long as it's available on cards.
Wow.
They will match it.
At 0%?
0% for 12 months.
Damn.
Okay.
Now, do you have to use it for specific things?
No, use whatever. If you don't want to work with me, you just want to, I'm not going to do it for you if you're not going to work with me.
Yeah.
But like, if you want to do it with me, you can do it with me. And, yeah.
That's powerful.
It's better than having an 800 credit score and just talking about it.
What's possible as far as how much you can make in one day? How much can you make in one day option trading?
Well, remember, it's not about one day because we're buying and selling on different days. So I would say,
what's the typical in and out cycle? How
2
many
weeks.
Days? 2 weeks. Okay.
2 weeks. That's why we do a 2-week trial because we know in the first 2 weeks you'll make money.
Got it.
Okay. So 2 weeks. I mean, look, I'm never going to tell you to put your whole budget in one trade. That doesn't make any sense. We typically do 1/10 of your budget per trade. So if you have 10K, we're going to put $1,000 into a trade. Our average return is 50 to 100% per trade. So just to make it easy, 100% means you're doubling your money. Okay. So 1,000 becomes 2 times 5 trades in week 1. Well, do the math. You can make a good 5K in 2 weeks.
And what's the, so let's just say you do 10 trades. What's a good win ratio?
We've lost 2 trades since September. Realized lost. Here's what that means. Remember earlier I talked about expiration dates on contracts.
Yeah.
That means, hey, this trade needs to come true by this date. Well, a lot of these dates are really far out for a reason because it protects us from short-term market fluctuation. Okay. So we've only actually had 2 trades where it hit that date and we were wrong since September. Since April, when the market reset, we've had about 6 or 7 losses. And I have data, like I have a video where I scroll through every trade so you can see the wins and losses. But yeah, the win rate is extremely high. It's 85 to 90%. And once again, it's because I built a team that specializes in what they do. So my options trader, he traded on Wall Street. Not only that, he's glued to the screen all day. So that's all he does. He's not dealing with clients even. There's a liaison between him and clients, our support guy. Our support guy, if people have questions about trades, they're talking to a different guy. So my main guy can focus on trades without dealing with anybody or any problems. That's why a lot of these trading gurus or groups don't work for clients, because you have an influencer like myself who's also trying to deal with clients, who's also trying to study the markets. It doesn't work that way, right? A lot of people want to go the algorithm route, for example. We built an algorithm. We've proven our algorithm does not outperform our traders. Software cannot beat a human mind when it comes to trading because there's just too much to it. A software can get you, even our algorithm will get us like 10, 15% a month. I mean, we're doing more than that per trade in 2 weeks, 50 to 100%. It's very hard. It hasn't actually been done yet. Building a software that can actually beat really good traders is pretty much impossible to do. Once it's done, I'll be very surprised.
What are a couple stocks that you like today?
Tesla, Nvidia, Amazon, AMD is an energy stock.
Okay.
Energy. Yeah.
So you like some Elon Musk stuff, some Jeff Bezos stuff.
Yeah. Big companies, blue chip, right? So like earlier you said volatile stocks. Volatile can be bad if you're dealing with like penny stocks or like rug pull situations or shit that doesn't make any sense. But we invest in blue chip stocks. We invest in companies that we believe in. So going back to even the crypto example, right? People are looking for this next crypto thing to go 50x and you become rich, like Dogecoin. Okay, good luck. But remember, none of these companies actually do anything. Tesla does something in the world. Nvidia does something in the world. Amazon does something in the world. I'm making strategic predictions. Any person with common sense knows Amazon's a good company. You know you order from Amazon Prime. You know that everyone in the world does. So we can either buy stock and say, I'm going to put 10 grand into Amazon and wait it out for 10 years. Or you can run it up over the next 12 months making strategic predictions with people that actually know what they're doing. That's what I did.
And most of these options, even if you're investing in Amazon or Netflix, are typically about 2 weeks.
Yeah,
where you realize the return.
2 weeks. Yeah, so we don't set the expiration date for 2 weeks out. We set it further out just in case. But based on the data that we've seen since April 15th, which I show on calls, it takes 2 weeks for us to see the return that we want, where we're willing to pull out.
Yeah. Like I said at the top of the show, I don't know much about option trading, but one thing I do know is a lot of the people that I know personally that do this a lot and they're very successful. They do options trading. They don't just sit there and buy stocks and wait for months and months and months. They don't day trade either. They buy options.
My cousin is the director of engineering at Meta, manages 100 people. My uncle bought Meta stock early when he joined 10 years ago. He's made a bag on Meta, but you got to think he invested very early, almost like an angel investor, because my cousin worked at Meta. But
so when they had their IPO, they were, I think, like around $35. It was Facebook back then, right?
Facebook
now it's
back
Meta.
then.
And what is their stock trading at today?
I want to say like 500-600.
500-600. Okay.
Yeah.
Okay.
Yeah. So realistically, you can try to like hit those big home runs, or you can just have a consistent system with multiple stocks where it's like, okay, the market is going to reward me for making strategic predictions, right? There's a reason why hard stuff gets higher returns, because most of the world is doing the easy way. 401k, S&P 500. Yeah, we know the S&P 500 is going to go up 6 to 8%. We know that. We're not dumb. We know the American economy is going to be fine long term. So like even like the 08 market crash, right? People lost a bunch of money. Well, you lost because you sold, because you were too invested in it. So even like, look, I'm not going to say people will never lose money. It's, oh, are you managing your risk? Like when someone says, oh, I over leveraged in one trade and lost it all. Well, that's your fault. Why did you put so much in one trade? I would never tie up all my cash into one asset, let alone one trade. It doesn't make any sense. So people are looking for home runs. What they need to be looking for if they're on their come up is consistent wins.
Do these trading accounts allow you to borrow against the options?
Yeah,
they do.
On Robinhood, you can trade on margin.
Okay.
We personally do that, but for our clients, we don't advise that until they are trading at a very high level. Like Zach, for example, the client I mentioned, or Will is another client who he's a tech sales manager, makes like $200-250 a year. He trades with me, and like he understands now how to manage his risk even within margin. But like for most clients, we're just trading with your cash.
In margin, when you do the margin trading, so you're basically borrowing against the money that you have in there. Like Robinhood, for example, what do they charge you to borrow against that money? Ballpark.
I actually don't know, because my traders do like handle all that for me.
And why would you trade with margin or borrow against it if you can access the 0% like you have?
That's the thing. There's really no reason. There's really no reason. Like it's only if you want to take really big swings. Like for example, Chris Camillo is a huge options trader, verified Robinhood account of like 50 million plus, lives in Dallas. He trades on margin. He takes really big swings. He takes like 5 a year. Something like that. He actually has a free Discord. He wrote a book called Laughing at Wall Street. It's one of my favorite trading books, despite the fact that he's laughing at my traders technically. But the point of the book and why I like it is because he shows you how you don't have to be a genius to be a sophisticated investor, because being an investor and actually making good money in the market is not about being that sophisticated. It's just about being around the right people and catching the right trends. Chris Camillo has a free Discord. He doesn't sell anything. But if you go into that Discord, I'm in it. It's just research. So if you want to do the hard work that Chris Camillo does, which is studying for 4 hours a day, trying to find the things that'll make you money, be my guest. But probably you're not going to do that with a full-time job. So we do copy-paste trading instead, just copy our trades.
You talk a lot about wealth acceleration versus wealth preservation. Break that down for us.
Most people are investing in the wrong order. Okay, so they're looking for things that will accelerate wealth, but they're actually putting their money into things that only preserve wealth. Example, 401k, 4% return, doesn't accelerate wealth. S&P 500, 6 to 8% after inflation. I even got into an argument with a guy on Fresh and Fit. He called in, it was a live podcast. He called in, he was like, Cam, you're bullshitting saying the S&P doesn't make you rich. I put 15 grand a month in the S&P since I was 20 years old, and now I'm 40 and I have 3 million. I'm like, cool, brother. How did you get 15 grand a month to invest in one asset? I worked at a hedge fund. I'm like, oh, okay, so you're not the average American. I'm like, interesting. So 15 grand a month times 20 years. The principal, give or take, is 1.8 million. I'm like, what do you have now? He's like 3 mil. I'm like, congrats, you haven't even doubled your money in 20 years. Like, you were already rich, right? You were already rich. You had 1.8 mil to put into one thing. Most Americans don't have that, but they're following that same strategy. They're like, wealth preservation, but they're thinking it's going to grow it. It's like, it's not really going to grow it for you. Wealth acceleration are riskier things, options trading. There's lots of other things I can name, but that's the one I'll name today.
Yeah, I mean, the velocity of money is very, very important. It's like, how quick are we doubling our money? You know, because wealthy people, for the most part, they figure out a way to get the money to work for them. And then you got to ask yourself, well, every how many years are you doubling your money? If you're investing passively or if you're doing it actively. And that's a big question, you know, for that gentleman, 20 years and he hasn't doubled his money yet. You know, that's something that he needs to look into. There's other vehicles out there that would, you know, obviously grow a little bit quicker. But the other thing I'll say about the wealth preservation is, I think when you invest in a 401k, you invest into IRAs, diversify, you're playing defense. You're playing not to lose. But I really think that, you know, especially in your 20s, 30s, and 40s, you should be playing offense. You should be playing to grow. And until you get to a point where you're like, hey, like, I'm going to be living off of this money here in the next 2 to 3 years, then at that point, okay, maybe shift your strategy a little bit. But if you got plenty of runway, man, there's no reason you should be playing defense, especially some of these young kids out there. I hear these kids that are, you know, in their 20s talking about, you know, diversifying. I'm like, dude, you should not be diversifying at this age.
I even look at everybody I worked with when I was in tech from every company. I've worked at startups. I worked at pre-IPO companies. I worked at a company called Handshake, which is a direct competitor to LinkedIn. They're going to go public in a few years. I look at everybody. Only one of my colleagues really hit big working at a tech company called Okta, which I'm sure you've heard of. Maybe not. You're in real. Do you know what Okta is?
No, I don't know.
Okta is like the biggest cybersecurity for like logging in. Like, so at a company, they have a bunch of computers. You don't want to get hacked, basically. Okta's single sign-on, whatever. He hit big. He got hired at Okta at the right time. Then my cousin obviously got to Meta at the right time. So 2 people technically. Other than that, where their stock blew up and they made millions off of the company going public, most people just cap out at like 110, 120, 130 and work really, really hard for that 110, 120, 130K a year pre-tax. And they have to live in the Silicon Valley where they're taxed California tax and the cost of living, which is really taking them down to like lower middle class, living in San Francisco, trying to keep up with everybody. And it doesn't work.
Yeah. 13% state tax here, man. It's no joke, bro.
It's not, you gotta be richer.
Yeah. I think a couple things here. So number one, I think if you're making 100 grand and you want to invest into real estate and all this sort of stuff, I think number one, you should probably focus on some skills, getting some skills to allow you to go from 100K to 250K. And then at that point, you actually have some money to invest. And then at that point, you can buy some real estate because you probably have a tax problem if you're making 250 or 500. Pick yourself up some real estate, get you some depreciation.
I'm doing that this year.
Use the cost seg study. Yep.
Mm-hmm.
The depreciation to offset your active income taxes. And then those savings you can parlay and roll into more real estate. And eventually you buy one real estate deal a year, 5 years, you got 5 deals. Then you have the option to work or not work. And I think that's where it's like, okay, life starts to become, when working is an option, then it starts to become easier. You're doing it because you really want to do it, And so I think that's really the game. But I think too many people try to get in the real estate game when they're making 75K. I'm like, no, 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 no. Go focus on your active income first. Go learn some more skills first.
That's another thing, investing in the wrong order. People are looking for passive before active. You're looking for passive income because obviously everybody wants to make money without working. We know this. But what is your active income? Because all of the things that are truly passive make less returns than the active things. So I'll give you an example. I just brought it up earlier. Software algorithm that trades. It's passive. You put your money in it and it runs, but it doesn't beat my trader trading by hand. We've tested it. So focus on active income until you're making more than enough, where at that point, it's time for passive protection.
Yeah, that's good. Cam, this has been a pleasure, man, having you on, bro. Big fan of everything you're doing. Where can the folks get in touch with you if they want to learn more? And more importantly, where can they get in touch with you if they want to take advantage of your free 14-day trial for the listeners?
Yes, sir. So Instagram is Profit with Cam. So Profit with KAM. Okay. Discord link will be in the description. You can literally just join. I will approve you. I will message you directly. We will set up a call. We will get your trading account set up. We will get you into trades within 2 weeks. You will see what happens within 2 weeks, and you will sign up within 2 weeks. That's typically how it goes.
Let's go. There it is. He's Cam Dasani. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you guys in the next one. Peace.